to go ahead with the show. But for the time being, we have Sacchitanand Uttekar of Tradebulls who joins us. Hi, Sachi. Good day. And after a while, I'm speaking to you at noon. Tell us, what's the strategy? Buying the dip has worked out. Do you think today as well is a prudent strategy? Mangalam just told us that the markets are down 60, 70 points. Would you buy the dip?
Good afternoon, Nigel, and good afternoon, Mangalam. Clearly, I think the market is range bound, especially if you look at yesterday's price formations. Both the Nifty and the Nifty Bank displayed a spinning top kind of formation, which is again indicating indecisiveness. But if you look at the data, the Nifty Bank still looks much more weaker because it has been trending below its 20 and 50 both exponential moving averages. So I think the resistance for Bank Nifty is very clear unless we don't see it surpassing that 50,800 mark on a closing basis. The chances of revival are bleak, and probably we may see the Nifty Bank sliding lower towards that 50,000 mark again. So we are expecting that Nifty Bank may continue to underperform. There is fresh weakness which is evident in a couple of its constituents, and that's why we believe that if one has to short this market, then I think Nifty Bank still presents a very good reward to risk ratio. Keeping a stop loss somewhere close to around 50,560, one can still deploy short positions here. We may see it eventually swinging towards 49,800. But when we look at the Nifty, so when we look at the Nifty, I think the Nifty is still holding on to that particular support, and there's a good chance that we may see a good outperformance here, and probably a swing towards 24,200 would be an ideal opportunity to create some long positions. So I think looking at the equation, it is better to keep a long-short ratio when it comes to stocks. On the short side, I think SBI has been on the weaker trajectory. We have already seen a kind of a bearish flag formation on its daily scale. That particular formation is now mature. That is looking at a breakdown point at around 810. So once we see this particular level getting breached, the stock can easily slide towards 785. That is the positional target. So we are recommending building fresh short positions when it comes to SBI. The stop loss for the trade should be placed at around 820, a positional target of 785. On the long side, Apollo Hospital, I think it is about to come out with its earnings. But if you look at the overall trend structure, it is a classic bullish flag formation on its weekly scale. Even today, we have good strong signals of long built-up formations, and the support at around 6,600 has been working well. So I think keeping a stop loss somewhere close to around 65.80, some long positions can be deployed here. We may see an eventual swing towards 68.60. The pattern target for the flag is placed at around 7,000. So I think there is a good outperformance in this particular stock, which may continue.
All right, take that point. Thank you, Sachi, for joining in and giving us your view on the indices and the stocks. Take a short break. On the other side, we have another manager.